The Labor Department has reported that U.S. initial jobless claims fell by 16,000 to 207,000 in the week ending January 25, beating expectations of 220,000. The decline signals continued low layoffs, but hiring has slowed as businesses assess President Donald Trump's economic policies. A Conference Board survey showed consumer confidence and job availability weakening, with the share of respondents seeing jobs as plentiful at a 4-month low and those viewing jobs as hard to get at the highest level since October. The pending home sales index dropped to 74.2 from a revised 78.5 in November, with sharp declines in the Northeast by 8.1% and West by 10.3%. The pending home sales index dropped to 74.2 from a revised 78.5 in November, with sharp declines in the Northeast by 8.1% and West by 10.3%. Pending sales were also down 5.0% year over year. The Commerce Department has reported that U.S. economic growth slowed to an annualized 2.3% in the fourth quarter of 2024, down from 3.1% in the previous quarter. The figure missed expectations of 2.6%, but remained above the Fed's 1.8% non-inflationary target. Despite slowing growth, strong consumer spending, rising 4.2% last quarter, helped sustain economic momentum. However, concerns over tariffs and a record high trade deficit in December prompted the Atlanta Fed to cut its GDP forecast from 3.2% to 2.3%. The Bureau of Labor Statistics has reported that U.S. labor costs rose 0.9% in the fourth quarter, slightly higher than the 0.8% increase in the previous quarter. Year over year, the employment cost index grew by 3.8%, down from 3.9% in the third quarter. This data offers some relief to Federal Reserve officials as inflation progress slowed. Wages and benefits continued to rise, supporting consumer spending. The Commerce Department has reported that U.S. inflation accelerated in December, with the Personal Consumption Expenditures Price Index rising 0.3% from the previous month and 2.6% year over year. Core inflation, which excludes food and energy, held steady at 2.8%. Consumer spending surged 0.7%, its fastest pace in nearly 2 years, driven in part by preemptive buying amid fears of tariffs. The data suggests the Federal Reserve may delay interest rate cuts, with no reductions expected before June. The Fed has lowered its forecast to just 2 rate cuts this year, down from 4 previously projected. For his part, Federal Reserve Chair Jerome Powell emphasized that there is no hurry to lower rates, citing ongoing inflation concerns and a stable labor market. While acknowledging uncertainty from upcoming policy shifts under President Donald Trump, Powell reaffirmed the Fed's commitment to its 2% inflation target. He warned that cutting rates too aggressively could undermine recent progress in controlling price increases. President Trump renewed his criticism of the Fed, blaming it for inflation and accusing it of prioritizing issues like diversity and climate change over economic stability. While he did not explicitly call for immediate rate cuts, his administration's policies, including tariffs, tax cuts, and deregulation, could increase pressure on the central bank. Powell refrained from responding directly, stating that the Fed remains focused on economic data rather than political influences.
I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicated his demand to you?
I've had no contact.